Joining me now, Wells Fargo Securities Managing Director, Senior Economist, Mark Bittner. I'm in hog heaven. I've got you and John Lonsky, so it's a sandwich, so to speak. Mark, this is great news on the economy, and is this what we need to keep not only the economy moving forward, but to keep these stock prices elevated at these record levels?
Well, it's clearly good news. I mean, we were looking at a gain of 0.2 or 0.3%. It came in ahead of that at 0.4. You take out autos, you're still at 0.4, and you take out food and gasoline and autos, and you get what's known as the control group retail sales, which give you a very good idea of how consumer spending is going to hold up in the GDP numbers. That was up 0.7%, and we had a small upward revision to the prior month's data. So the consumer's in pretty good shape right now, and I think that should alleviate some of the fears that folks have that just because this expansion's now into record territory, that we're somehow due for tough times.
What could get in the way of this consumer? I say optimism, but again, consumers are putting their money where their hearts and heads are.
Well, if something was to go wrong with the...
Sorry, go ahead, John, and then I'll get back to you, Mark.
If something goes wrong with the labor market, okay, because of trade frictions and whatnot, or weaker... You don't have weaker than expected earnings, so I don't think we're going to see any problems with employment or income growth that otherwise might halt growth by consumer spending. It's interesting that in this sluggish world economy, who comes to the rescue? But the American consumer, it seems. It's keeping the world economy afloat.
And one thing, Mark, I'll just point out, one of the things that helped people spending was the drop in gasoline prices. Again, that's puts more money in their pockets the way a tax cut would.
Yeah, and that's one of the reasons we were looking for the headline number to be a little bit softer, is that lower gasoline prices actually reduce the headline retail sales, and that's why we look at that core category. But consumers are getting a little bit of a break there, and that's. That's one more thing in our favor. One of the things that was a little surprising in the second quarter is that we saw that tax refunds were lower than they were a year ago, and a lot of folks were looking for that to slow consumer spending. But with these data, it looks like consumer spending in the second quarter, in terms of the GDP data, rose somewhere in the neighborhood of 3.5%, maybe a little bit better than that. So we're likely to have very solid GDP growth in the second quarter.
And I'll just point out that we were looking at import prices fell more than expected. They were down 0.9%, so we're not importing any inflation.
Yeah, the tariffs don't seem to be impacting inflation here in the U.S. I know a lot of folks think that it's going to have a huge impact, but a lot of Chinese producers have actually eaten at least a portion of the tariff or maybe the entire tariff because they want to try to protect their market share.
Jack Brewer has a question.
Yeah, Mark, Jack Brewer. When you look at the political landscape right now, you see the messaging coming out of the Democratic Party, and it's all about, this is a trickle down. It's not getting to the right folks, and we have a big segment of our population that really are tight right now and not feeling the effects of the Trump tax cuts. But when you look at the numbers, it says otherwise. At what point does the reality fit the messaging here?
Yeah, I mean, it's sort of like that old Richard Pryor quote, "Who are you going to believe, me or your own lying eyes?" I mean, it's plainly evident that the economy is doing well, and I kind of feel bad for some of the politicians that are hoping that it does worse, because that's a terrible thing to hope for. It is. I mean, the economy is broadening. Parts of the economy that didn't get a boost earlier in the expansion are now being lifted. And one of the things that I spend a lot of my time out visiting with customers, and a lot of those customers are in smaller towns or rural areas. And for a long time, the recovery just wasn't there. But in the last couple of years, we've seen that population growth in those rural areas has actually started to grow again, because jobs are coming back and the unemployment rates have come down in those areas. So if anything, the expansion seems to be broadening. The one thing that I'm concerned about is that with the global economy slowing, the dollar has strengthened a little bit, and that's slowing manufacturing activity in the U.S. And if that continues, that could slow the economy. Although that's something to worry about for next year, not in 2019.
Lee, I want to get you in here on this because this is something you were talking about earlier. I've said this for months. The Democrats have to be very careful that they don't seem like that they're rooting for a slowdown, that they're rooting for what they would label the Trump recession, but they cannot run well on this economy as it stands right now.
I don't think that they can, and I think that there was a big risk that they were going to turn into the boy who cried wolf and saying now it's going to run out. The economic boom's going to run out. Oh, now look at it. It's being propped up. It's not going to work. And we're seeing that it's continuing to work quarter after quarter. And so I think the Democrats have switched strategies. We've seen them say no longer is this now, doom and gloom right around the corner. Now it's this isn't the economy for everyone. It's the economy for the wealthy. It's the economy for the big businesses who are profiting. And I think that's also a dangerous strategy when you're seeing consumer confidence as high as it is right now.
And John Lonsky, before we go and say goodbye to Mark Vittner, the Federal Reserve is trying to ensure it's not necessarily fear of a recession that Jay Powell and company are reacting to. It's to make sure, like in 1998, that this expansion continues. That's why they would cut rates later this month.
Exactly what they intend to do, and that's why we're getting this rate cut at the end of July. Despite growth by consumer spending and an ultra-low unemployment rate, inflation is very well contained. So there is room for lower interest rates, and as a result, we've been looking at significant increases by mortgage applications for the purchase of a home. Applications for mortgage refinancings are up by a tremendous amount year over year. Lower interest rates will help to extend this upturn by consumer spending, and as long as the U.S. consumer spends, a recession is not in sight.
And I'll just point, before we go, Mark, I'll point this out on the front page of the Wall Street Journal today, that Hispanics are experiencing the largest home ownership gains of any ethnic group in the U.S., and it is shoring up our housing market. So, again, that is a rising tide lifting many boats.
Absolutely, and we're seeing more and more good news in more and more parts of the economy.
Thank you. Mark Vittner, always a pleasure to see you, sir. Maybe in person next time. Let's hope. Thank you, Mark.
We'll hope so.